Hello traders, you're welcome back to the Forex Geek channel. Now, in this video, we are going to be looking at a step-by-step breakdown of an aggressive but precise indices scalping strategy that works beautifully on fast movers like US 30, US 100, and SPX 500. Okay, so especially during the NYSE Open. Okay, now let us lock in and go straight to the setup. For step one, you need to understand time frame and session. Okay, this is a scalping strategy. So we are focused on the 1 minute and 5 minute charts. The ideal time to trade this strategy is around the New York session open. That's when volatility spikes, spreads tighten, and momentum becomes more predictable. Okay, so mark the NYSE, that is the New York Stock Exchange. Mark the New York Stock Exchange open time on your chart. It's a key driver of price action for these indices. Now, the second step is market structure. Before taking any trade, check the overall structure on the 5-minute chart. Are we in a clear uptrend or downtrend? Currently, we can see that we are in a downtrend. So higher highs and higher lows, higher highs and higher lows equal to bullish, while lower highs and lower lows equal to bearish. If it's choppy or flat, like what we can see happening here, if you have price moving sideways or you have a flat movement, just skip the setup until momentum returns. Okay, draw your recent key highs and lows to define short-term support and resistance. All right? These are your reaction zones. Okay? These are your reaction zones. Now, you switch back to the 1-minute chart. You look for zones where price made aggressive moves. All right? Look for sharp pushes up or down. For example, you can see this sharp move down after price got rejected around this resistance. Okay, so mark those candles before the move as your supply or demand zones. Okay, these are where smart money steps in. All right, where smart money steps in. Okay, you wait for price to return to one of these zones. All right, wait for price to return to one of these zones. You are not chasing. Okay, you're letting price come to you. Waiting for price come to you. All right. Now, once price hits a zone, you wait for confirmation. You can use a few quick tools here. Perhaps a rejection wick, rejection candle, with a long wick, or it could be RSI divergence. You can actually decide to use RSI divergence for confirmation. That is when price makes a new low, but the RSI doesn't, or when price makes a new high, but the RSI doesn't. Okay. Then you look for volume spikes as well at the zone. So you want to add volume indicator to get volume confirmation. You can see here, you can see that we had a volume spike around this zone as price got rejected. All right. Then you look for quick break of minor structure on the 1 minute, like a micro CHOCH or BOS. Okay. In that case, you can see that we had a break of structure here. Can you see here? See, as price dropped below this, right? You can see we had a break of structure. So you can enter once you have a clean rejection or confirmation of the zone. Keep your stop loss tight. Maybe after you enter the sell, because you can enter a sell around here, you already have your confirmation, volume, RSI, bearish candlestick pattern, rejection from this key zone. You can enter your sell. Stop loss can be above the zone, this particular zone, and then your take profit can actually be at key support levels. This is for a sell trade. All right, or you can decide to use a fixed risk to reward ratio. All right, your take profit should be 1:2 minimum. So if you're risking 10 pips, the potential profit target should be at least 20 pips. All right, that's the risk to reward ratio of 1:2. For scalping, you want the move to play out fast. So if price stalls or pulls back to entry, consider closing early. You are in and out. Okay, this is not a hold and hope setup. All right, it's not a hold and hope setup. Okay, so also be disciplined. Okay, be very disciplined. Take only 1 to 2 solid trades per session. You don't want to, take random trades. Okay, you should be seeking high probability trades. Trades that have high potential of, high possibility of giving you success. Okay, so you don't want to just take random trades. Ensure that your trades always aligns with, your setup. Ensure that you have confirmations. For example, you want to enter a sell trade, you get confirmations like rejection from resistance, horizontal resistance, trend line resistance. You get confirmations like RSI decline, whether coming down from overbought territory, rejection from the 50 to 60 level, trending and sloping downwards. Get confirmations like volume spikes around, rejection from a resistance zone. Okay, so once you have your confirmations, you can proceed to executing your trade. All right. Now, overtrading kills scalpers. So while you are scalping, you want to avoid overtrading. Yes, it is true that scalpers look for multiple trades. All right, but ensure that your trades are high probability setups. All right, you don't need to execute 100 trades in a day. You can actually execute few trades, even though you are a scalper. You can execute few high probability trades in a session. All right, and at the end of the day, you end up making substantial profits so long as you've abode by the rules, so long as your strategy is working, and of course you manage your risk properly. All right, so this indices scalping strategy is about speed, structure, and smart zones. It doesn't rely on guessing or lagging indicators. You are following where price has reacted and using that to strike with precision. If you're serious about scalping US 30, US 100, or S&P 500, this is a setup that delivers when you stay disciplined and trust the system. Make sure you like this video. Click the like button right now if this strategy gave you clarity, and don't forget to subscribe to the channel for more high-level breakdowns like this. Turn on notifications so you never miss when we drop a scalping setup. Comment below with your favorite index. All right, I look forward to seeing you in the next video. Happy trading.